What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about Applied Materials, AMAT. Where's Bartosiak? I'm right here. I'm right here, B-boy. Trevor, how you doing? I got the Tiesto thumping. Why don't I ask the girlfriend for a good home-cooked meal? Well, Trevor, frankly, she doesn't have many good home-cooked meals in her repertoire. Her mother's a fantastic chef. She is not. She is good at making, she does like an Italian sausage and pasta kind of deal. That's good. So that's one feather in her cap. That's about it. Aside from that, she's working. She works during the day, and then she has not cooked anything since we've came into this new place. I, on the other hand, have been cooking up a storm, my friends. I did this little like chipotle pork stew kind of thing. I did that, and call the mother-in-law. Right, we're heading over there for Thanksgiving, so there'll be that. Today's a little bit of a disappointment. I literally have like a Walmart pizza that I just pulled out of the oven. So I have a pretty low bar here today. But that's okay, you know? You don't have to be gourmet every day. And we got to do some shopping, right? Middle of the month, it's payday. Go to the grocery store, load up, and go from there. So I've got a pretty... No, Trevor, I would not call myself a good cook. But I try. I stick to the basic stuff that you can't really screw up. So I bake chicken. Bake chicken in the oven. Done that a lot. Chicken breasts. I bake pork chops in the oven again. I know my way around the slow cooker. And the Foreman grill for steak. Aside from that, man, that's about the limit. But I'm learning, little by little, getting there, right? All right, so I'm going to try and cook up some profits here in Applied Materials. Everybody, gang's here. Trevor, B-Boy, Bruno, Mr. Wallace, Mr. Williams. What's up, everybody? All right, now let's look at this. Let's dig in. Let's get dug in. Let me. I don't want this to turn into a love fest, right? But I think it's going to turn into a little bit of a love fest for Applied Materials. AMAT. Right? Why? Because look at this price consensus and EPS surprise chart here on Zax.com. 2015, the trough, and then the ascension. As always, the black line corresponds to the price, which is the right y-axis. The multicolored lines represent the evolution of our Zax consensus estimates and correspond to the left y-axis. The green arrows are earnings beats. Red arrows, earnings misses. Haven't had a miss in a while. I have a Foreman, and it's spectacular, Kurt. I use it for lots of things. So here you can see not only the growth year over year, which is great, but you see these expectations constantly going to the upside. That's fantastic. And again, yesterday we talked Best Buy and we were going back and forth on the revenues a lot. This ain't revenues, my friends. This is profit. Payout. Put it in my pocket. Money made. And yes, that's $350 over here in the stock at 55. Don't normally see that in tech stocks. We're going to dig a little bit more on this, talk valuation later on in the show. But overall, what are we gleaning from this price consensus and EPS surprise chart? Spectacularness. That's what we're gleaning. Things are looking great. These moves are all in the right direction. Now, your risk is, does it keep on going? Can it extend forever? We're not sure. Let's look at the detailed estimates chart here on Zax.com. Zax rank number 2 by style scores BAF. Top 2% of our Zax industry rank in that semiconductor equipment wafer fabrication. Getting a little close there. Wafer fabrication. Whatever. Who cares? After the bell tomorrow, November 16th. So you got the rest of the trading day today. All of tomorrow. Figure out. Hefe, Bodon, how you guys doing? Welcome. Let's look at revs. Current quarter revenue growth, 19.18. Next quarter looks like 20.93. Current year, we don't have, I'll have to see why that says nah. Next year, 11.42. So growth will slow into next year, it looks like. And this quarter is marking sort of the rounding out of this year. So therein lies a risk that there's some slowing to this revenue growth story next year. On the EPS side, 36.87% growth this quarter. Next quarter looks like 35.57. Current year, 84.29. Next year, again, slowing. So you have to worry, when is this slowing going to make an impact here? Overall agreement, last 60 days to the upside. But that was a while ago. But 5 analysts increased their estimates. Then you had... How did I get this big all of a sudden? It just gets bigger! 5 estimates, 3 estimates, 6 estimates, 4 estimates. So all to the positive direction. Look at the overall magnitude to our exact consensus estimates. Gone from 82 cents to 90 cents for the current quarter. Aaron, how you doing? Next quarter, 76 cents up to 91. Current year, 312 to 323. Next year, number 332 all the way up to 368. So these are looking pretty good. Surprises. There have been small surprises. 3 pennies here, a penny there, 3 pennies there, a penny there. Pennies. Look at this revenue. Throughout the years, we got 20% growth, 6%, 12%, 33.9. And then it's going to slow to 11 and 3. So you can see this kind of ramp up. Still ramping. And we're ramping. Still a ramp we're expecting this quarter. But look at next quarter. Not expecting the numbers to continue next quarter. Or the quarter after that for that matter. So growth slow. So we got revenue growth hitting a stop sign. Slowing down. That's a potential risk heading into here. A little bit of a risk. Let's look at the EPS side of things. Here you see some huge numbers, 79%, 11%, 49%, 83%, slowing again. Where this quarter is going to be okay, and then it's going to slow, and then you actually get a contraction. So the risks are here. There are some risk of slowing, and obviously the market doesn't like to hear that. Let's look at the valuations. Forward 12. About 15 times. That lags the industry. Industry's about 18 times. So a little bit of a room as they're trading at a discount if you're looking forward 12 earnings valuation. Also, this should be a feather in the cap of the bulls. Let's look at the medians here, right? These median EPS numbers on par with where you were in 2015. That's going to differ from the rest of the market. If we look at the S&P 500, you're going to notice on the S&P, there's been steady expansion in PE multiples, whereas Applied Materials has actually seen a bit of a contraction, and they still have growth numbers. So from a valuation standpoint, I think you could say that's all right, right? I wouldn't call this overvalued. I don't know if I'd call it undervalued too much. I mean, a little bit, right? But I wouldn't make that dramatic of an argument. But it's still another feather in the cap for the Bulls. Price to sales. Let's give this comparison. And here's where you see a little bit of richness in the multiple at 3.59 times sales. And that is where the richness comes in. So 2012, 2013, 2014, 2015, much lower price to sales ratios than we're having recently. So the EPS is doing all right, but the price to sales is not doing so hot. You know what that's a direct result of, my friends? A little financial engineering. That's what that is. Can't lie so much on the revenues. You can get cute on the EPS side, and that's not a strike against these guys. I'm not saying they're doing blatant financial engineering and things like that. They're just, sales aren't growing as quickly as the EPS side has been. So they've been, yes, you could argue they've been getting more efficient. Their pricing has been better. All these things, absolutely. Not trying to make, just giving you, we talk Bears, we talk Bulls. You got to outweigh the pros and the cons. There are going to be some bearish points. There are going to be some bullish points here. Okay. Now let's look at how they've done recently in terms of their surprises and what the stock has done. So this is 2 days before, 2 days after earnings. 2017, nothing. July 2017 quarter, rather. Then there's a 3%. There's a 14 bips, 2.4. You got to go back to July 2016. Last time you really had anything happen to shares of Applied Materials. So it's been a while. However, the stock has moved pretty significantly. So let's look at that. Already, jumping off the page, post-earnings drift, my friends. So you don't get huge moves, but you get drifts. Here's some Chop City. Here's a drift. Drifts. Lots of drifts. Lots of drifts. So don't expect to get a huge pop in these. And look for drift. All right. So we're going to look at the 56s here. They're reporting after the bell. Mañana. So you got the rest of the day today. All of the day tomorrow. And then Friday, we're going to talk about these guys on the morning after. Let's look at the $56. $56 option prices here. I can't believe I'm saying this, but this Walmart pizza that I got for $4 actually looks kind of decent. Not terrible. At the money call, 133 by 153. We'll call that 143 all day. At the money put, 148 by 162. 155. That's 298. So they're looking for $3 pretty much. They're looking for 5.6%. I don't think it's going to happen. $3. Let's look at the chart. $3 Chuck. What do you got? 53s. Puts you here. And then up near the highs. What's happened with AMAT after coming down to the 50-day, close to the 50-day, interacting with the 50-day a lot? You see this buildup of volume around here. Then it starts to drift away from that volume point of control, and we got all these valleys. Lots of valleys. But in here, in this valley, you got this peak, 52.63. Where's my 50-day? At 52.36. So 53. Just outside of 53, there's really some support. So there you go. So that makes sense. And then this just sideways action for the last few weeks. Ain't nothing doing. Getting into this range. What does that tell me, though? Now, we've talked about good old Bollinger Bands. Not here. Not here. Up here. Up here, buddy. Keep your eyes up here. Quit staring at my band. you can see the Bollinger Bands coming together. So as the Bollinger Bands come together, the likelihood of a breakout in either direction becomes increasingly likely, okay? So you got that throws in a little wrench into things, right? So on one hand, you have like a Taiga Bollinger Bands, but on the other hand, you have historical, what would you just a lack of enthusiasm following AMAT earnings. So it's a post-earnings drift kind of play, and our earnings trend is intact and very bullish. Mr. Trumber, how you doing? It's been a while. It's probably been only like a couple of days, but it feels like it's been so long. So you like it when there's more clear-cut direction. So the technicals are telling me it's due for a move. But historically, we've seen that it hasn't moved. But could that also mean that it's due for a move? You know? Here's the other thing, though, specifically for the market. I don't know about you guys, but it's been tough. Again, this overnight selling in Japan puts us in a hole, and then we can't dig out of it. Right? Again, early hole, couldn't dig out, under pressure all day. It's not a good week. But it's been hard. It's been choppy. S&P's coming down to this bottom Bollinger Band. Maybe you'll get a bid. Wild Bill's headed to Vegas. I'm a little jealous, Wild Bill. Been a while since I went to Vegas. Been a while since I went anywhere other than Chicago. That's the only place I ever go. I go to Chicago, I come back to Miami. That's it. I guess I can't complain, because those are two fantastic cities. Let's go to NASDAQ here. NASDAQ just kind of plodding along also. To the upside, though. Still supported. Look at the socks. Steady Eddie. Tech doing okay. All right, let's get back into the options chain. See what we got going on here. We'll get back to that front week. Stack it. This is the problem when you got these $56 stocks. You end up having to do the 55. You get a little bit in the money if you're going vertical. On the if. Here's the other. Here's another bit of a negative here. Selling these out of the monies. Out of the money call spreads. Bears, look at this. So $3 out of the money. This is basically what the market was pricing in. So you're just a vampire of optimism here. So what you're doing, you're selling those 60s for 92, simultaneously buying the 62.50 for 47. You're getting 45. That may not be attractive given that you got 205 at risk. That's only 22%. I don't like it. I don't know about you, but I don't like it. Potential to make 22% on it just staying below what the options market was pricing in. It's not attractive to me. Not a good risk versus reward as far as I'm concerned. So bears have to consider getting vertical. Basically 53s is what the market was looking for. So bears would have to do something like this. Go long the 57.50 put, that's 330. Selling the 52.50, you're going to get back 110, that's 220 at risk. Difference in strike prices is $5. Minus that 220, that's 280 you can make on the 220, or 127%. And again, you need a pretty sizable move. Pretty sizable move, guys. So that's not good. Let's do this. Pinch it in. another week. This way we're going to get more strikes. Sure, the open interest is going to drop a little bit, but there's still a decent amount of liquidity in these, I think. There's 100 contracts, 500 contracts. There's some eyeballs here. Look at the 56s. And I said 53 is what the market was looking at. This is going to look a lot more attractive. And the reason why this is going to look more attractive, guys, because you're not paying for the in-the-money portion of that 57.50 put, okay? So now look at this. At this 56, let's say you're going long this put spread. 225 is what the 56 put's going to cost you. You're going to get back 104 for selling the 53. It's 121. Difference in the strike prices is $3 minus that 121 is 179. On that 121, you can make 147%. So that's more attractive. This is a bear debit. Bear debit is long. This is December now. December 8th. 56, 53 put spread for a 121 net debit. It's a bear debit. Bear credits, now you can get a little bit, it's still not gonna, it's not gonna be much more attractive. Difference here is only 19 cents. So do you want a 19-cent credit so that you can make 81? No, I don't think so. I don't think so. I think to get rewarded here, you really have to go with the debits. Okay, that's on the bearish side. Now, what about the bulls? The bulls, I think you look at this 56. You say basically 59. And you got to think it gets every bit of that. Probably even pushes up higher into 70, into 60s. But if you go long, the 56 call is going to cost you 208. Simultaneously, going short the $59 call, you're going to get back 96 cents of that, or 112. Difference in the strike price is $3 minus that 112 is 188. You can make a 112. That's good for 167%. So here's a bull debit. Long December 8th. 56.59 call spread for I already forgot what the number was. 12, right? What was it, 114? I suppose 112. 112. Suppose I could just do the math again. Easy enough. Yeah, 112. Net debit. I think that's going out far enough to catch some of this post-earnings drift. There's one thing that's making me a little bit nervous about this, and that's the fact that you have this growth already and the stock pushed up. The move in the stock so far and fast and then just sideways is strange. Strange to see, personally. A little bit of rolling over, but that's because they're just looking for something, right? Remember, the last time they had an earnings estimate revision was, what, 3 months ago? 1, 2, 3. It was back here. So the stock naturally rose after that revision to the upside. And then just kind of went sideways waiting for the next thing. Reports that I've read, a lot of companies are expecting a beat and raise quarter from them. So if it doesn't happen, you bet they're going to retest that 50-day, maybe even lower. Actually, if it doesn't happen, it's going to get worse than the 50-day, okay? An okay quarter would have them retest. From what I think, they're one of their major chipsets, or the chips that they make, this 3D NAND, is supposed to be big time this quarter. So I think that's actually going to benefit them. I don't want to jump in the face of a long-term trend like this. I think they may be a little bit overbought heading into it. But the fact that, so because it wasn't one of these, and then here's earnings, that it was one of these, and then here's earnings, makes me feel more comfortable going with the bulls on this one. The market hasn't been rewarding stocks consistently, though, right? We get these pops, and then they fizzle. So this is what I'm going to tell you guys. That I think AMAT beats, and they guide higher. And I think that the stock pops. But I also think that you should be very quick on your draw. So if you want, even go sooner. Okay, look, let me clarify this. If you go sooner, this money is immediately at risk. All of this money is immediately at risk. If you go out to the December and put that spread on, you have much more time. And yes, play a fade if it shows up, absolutely. But you can play this December contract, but tomorrow or Friday morning, like, be quick on the draw. We're not going to stick around in a stock like this in this market because it just hasn't been rewarding. Unless we get, some meaningful progress on tax reform, and then we're off to the races and it doesn't matter what happens. If you're going to sell puts, Jeff, just get under here. Get under the 50-day. Get into the 53s. Sell those out there. That's where you should go. Lottos, 58.50s or 59s. Okay? 59s, 58.50s. Those are the lottos. But we could just do those the next morning, but whatever. Lotto's November 17th. 58. Let's say 58.50. Call for 48 cents. Trade that pays. Bull debit. I just can't jump in the way of this. Right? You got to keep riding it. Ride these earnings trends until they die. And right now this isn't dying yet. So ride it to the end, my friends. All right, that's all I got for you here in Applied Materials. I think they have a beat and raise. Sure, we'll find out. Now remember, we do have a show tomorrow. I think we're talking Foot Locker, which is great because I got some new shoes to talk about. But Friday morning is going to be the morning after, and we are going to directly address Applied Materials. So if you like this show, make sure you come back for that show. As always, you can subscribe. Subscribe to the channel. That's a no-brainer. But if you shoot me an email, livetrader@zacks.com, I'll make sure you're on the distribution list so that you can know when these shows are all happening. Most of the time, they're 1 p.m. Central, but, you want to know when it's happening. And then, of course, you can join us in the chat room there on Discord, where a lot of these guys are at. And again, Friday morning, Applied Materials, we're going to have a live reaction to the earnings. All right, folks? That's all I got for you here today. You got lottos. You got a trade that pays. You got all sorts of fun stuff that you can take a look at. I've got to eat this $4 Walmart pizza that's sitting next to me. I'll let you know how good it was. First time I had a Walmart pizza, so we'll see. All sorts of strange happenings here in the mean streets of Sunrise. So thank you so much for hanging out with me here today on Zach's Live Trader. I will see you all in the chat room and mañana for Foot Locker. See you soon.